Welcome to the part two of the masterclass. If you have not watched the part one, please, I want you to go and watch the part one of the masterclass because I'm going to be sharing things that's going to be helping you to become profitable and to know how to read the market, to be able to make decisions that can help you to make money in the financial market. So, in that part one, I explained a lot of theory, but I just want to go down in this part two to talk about the practical, how personally how I look at market structure because I think life is about how you perceive things. And the way we perceive things usually shows up in everything we are doing in our life. So this is how I see market structure. A lot of people look at market structure in different time frame. Maybe some people like 1 hour, some people like 15 minutes, some people like 5 minutes. For me, I like the 4 hours. It gives me more clear direction and it helps me to actually see how the market works. And I'm actually going to do another video explaining to you how I incorporate market structure and RSI that helps me build my profitability. And this works so well on Euro USD, GBP USD, AED USD, and so many other USD pairs because I always look at what is happening on dollar index, which is DXY. DXY actually show me how I can be, interacting with every other cross pairs against USD. All right, so let's go straight into what we have. As you can see, this is uptrend. We're going to be discussing uptrend and downtrend. As you can see in uptrend consists of higher highs and higher lows. I'm also going to show you downtrend consists lower high and lower low. So I'm also going to show you that so you can actually understand. So this is what I actually put together on my chart so you can actually understand. So this is a clear market movement and on the uptrend and also on the downtrend. Like I always like to do my market structure on the 4 hours, but I go to daily and weekly to map out key levels of market support and resistance area where price could definitely have a major reaction once price gets to those areas. So I go to lower time frames like higher time frame like daily and weekly to map out those areas I think that once price get there we can have a major market reaction. So now as you can see we have a clear uptrend here. Now this is a 4 hour. Remember, if you go on 15 minutes, let's go on a 15 minutes for you to see this very clearly, for you to see what I'm showing you guys. Let's look for it. As you can see, this is 15 minutes right there. You can see 15 minutes has so much candles whereby that there's a lot of higher highs, a higher low, there's a lot of noise going on the 15 minutes time frame, of which for you to do trade 15 minutes effectively, you need to know what you are doing. I kind of like, oh, you can see it's no longer showing us candles because they I'm using a free plan on trading view. So if you look at it right now, you can see we have lots of candles. You can also see higher high and higher low structures in this 15 minutes time frame. A lot of things are going on here. But personally, I don't like to look at 15 minutes. For example, if you look at this here, a lot of people might be taking buy on Euro USD around here. On this trade, they might be taking buy around here. But personally, I might not like to take buy around there. You can see this was I took this trade. This was one of the beautiful trade that I took. I think I took this trade somewhere around here. This was where I entered, and guess what? Price went my way into a very strong bullish movement. So that is just how to do analysis. How I look at the chart. I don't just look at it, on the 15 minutes time frame. I look at it on the 4 hour time frame. Like this 15 minutes time frame is called minor structure, while 4 hour structure for me is called major structure. It's very simple. So 1 hour can also be called minor structure, but the main structure I use to identify clear market directions are 4 hours and daily. I rarely look at monthly or weekly. It depends. I kind of like I just want to look at it, but I really don't make decisions at weekly and daily because weekly and monthly because a lot of things can just change quickly on the lower time frame. So that's just it. So now this is it. Back to 4 hours. As you can see, price of Euro USD is heavily dropping. I'm currently market session. I did this analysis on my YouTube when I talked about Euro USD collapsing for the week. In my market analysis, you can see it collapsed heavily because of the way I trade. I also capitalized on it. I passed my profit from accounts, and it was really interesting, bro. All right, so let's go into the analysis and see what I even drew is even shifting. Let me make it very clear. Okay, now as you can see, you need to always pay attention to the structure, not the candles. Pay attention to the way the market is moving. You can see the way price put up a high. This is a higher high right there. Then we'll have a higher low. Now, why did we call this a higher low? Because why? Price respected this low. Price did not break it. Price held. So price did not break this low. So that is why this place is a higher low. Now, guess what happened again? We have a higher high, which means price put up another high that is higher than this one. This high here is higher than this one. So with these two highs right now, we can actually classify this as an uptrend. Now, there is also another important thing for you to pay attention right here. Now, let me zoom my screen so you can see. You know, this thing might be uptrend like right now. Let me remove this. I want to explain something. I'll still put it back. I will still put it back. Just give me a few minutes. Now, a lot of people might be looking at this thing. Let's say the way we are having a higher high, then we'll have something like a higher low that will stop here and go up. Let's say, for example, they're expecting the market to, let me take this off. They're expecting the market to stop here and go up. Now, that might be what you have in mind. Like I told you guys, the market form in different variation and different degree. Now, you can see the way the market take that low and still go up. A lot of people might be seeing this thing as market structure break. That's what most people will be seeing, that market structure breaking, that is about to go down. I don't see the market that way. I always look at the overall direction and movement of the market. So it is important for you to understand how to read market structure, understanding that it will not always be like the way someone draw it on the chart. Just start training your eyes. Start training your eyes to see what's constantly always happening in the market. When you start training your eyes to see those things, you build a lot of experience that you can use to be making so much money in the market. So you can see the market after forming that, you can see we'll put up a strong higher high. This is a higher high, this is a new high, then we'll have a higher low. You can see this is a very serious uptrend. Then we'll have a higher high again. Markets keep going up, keep doing the same thing. Then we can see what we did here. We did a higher low. Now remember, this is already existing. This is already a previous chart. You know, I kind of like using what is relatable to show you, or what is explainable. But remember that price first of all did this first, this thing that happened here before this. So how would you react in situation where price did something like this? What would you do? Now it's all about experience, but for me, in my humble opinion, this is what I could do. This is what I could do. If price do this sell off like this, I will still see this as a higher low for it to create a new high. Probably I'll be buying this thing right here, expecting it to keep going up. But you can see the way price went up and go lower. Now, this is all about experience. Now, what will make me to buy this thing right there is, number one is timing. Timing will make me to buy it right there. What will make me to say, okay, let me close my profit? Number two is also timing. And again, RSI. You can see the two reasons why I'm going to be leaving the market if I buy from, let's say I took a buy here. The reason why I'm going to be leaving here is one, timing, and two, RSI. These two things can now help me to look for, maybe hold the trade or just leave. Because why? I already know that the trend is bullish. Imagine that I bought this thing here, always saying that, oh, it will continue to go up. Now look at what happened. Price come all the way down, and guess what? Before going up again. Now when price create, we can see call this all of this area as a higher low. Now when price wanted to create a new higher high, as you can see, He wanted to create a new higher high. It failed and dropped all the way lower to the downside. Now, can we call this a break, a change in trend for being bearish? Yes, we can still call it that this thing has changed to become bearish, but we cannot make that decision to say that this is a bearish market until this high is being violated. Now, this high right here needs to be violated. Well, what do I mean by violated? For me to say that this is now a bearish market after market breaking it like this, for me to call it a bearish market, I need to see price coming to this high and refuses to continue going up and it start coming down. When that happens, I know that okay, we might start going down immediately. But if you look at what happened, price did not do that. Price just break it through. And some people might put a sell limit here. That is why I don't like to use sell limit, because why? You don't know where price is going to reverse. You understand? Because there's a lot of reason why I won't put sell limit here, because price could get here in a dangerous timing. I think I took this buy here, right here, and all the way to this top. And when price got here, the market was in heavy momentum movement. Now, me buying here or me selling here become very risky. Now, guess what happened? Price uh, uh, start going down the next day, and guess what? The sell that you were expecting, because when this low was broken, it makes sense. When this high created this low, it makes sense that we might turn bullish, we might turn bearish. But you can see the way price broke it, it looks as if we are now back to bullish. But you just press breaking it, and guess what? Price continue to go lower, and this is when we start changing trend, start turning bearish, whereby that will start creating lower highs. You can see we created a lower a low, then we created a lower high, then we created a lower low. When we created this lower low, you can see what happened next there. Price uh created a lower high, but it didn't create any other lower low. You can see we didn't put up any other low, whereby that we pushed up, we dropped, we failed to go up, so we fail to go down, we go up, we drop again, fail to continue going down, we just change trend. Now this is how the market move from bullish to bearish and from bearish to bullish. You can see this was bullish to bearish, and from bearish it turned to bullish. And right now you can see when the market turned bullish, you can see when we broke this high, you can see we broke this high. This was when we turned bullish. We broke it with a body. Like I said, I usually take wicks and body as breaks. So we break it, and you can see what happened. We had a retracement, price continued to go up. Another retracement, price continued to go up. Retracement, price continued to go up. You can see this is when we now shifted bearish. We shifted bearish right here. Right now, Euro USD is at a bearish trend. But will I now that I know that Euro USD is bearish, should I just click sell and allow the market to keep selling? If you do that, you're going to put yourself in a very dangerous situation. Because why? Price could do something very crazy. You could just see price go all the way up before going down. So right now, what am I expecting? I'm expecting price to go up. Yeah, I'm expecting price to go up. And even if price will go up, I need to be very careful on the timing. Now, for me to look for bullish movement, for me to look for bullish opportunity here, it has to be around 11 a.m. Looking at 11 a.m., what happened at 11 a.m., 12 p.m. I'm talking about Nigerian time, or look at what is going on, how markets will start reacting at 3 p.m. 3 p.m. I'm talking about Nigerian time. It might be different time depending on the where you're watching this video. If you're watching in the US, I think it's Eastern time. It's just different time zones. But what I'm saying is I'm talking about London section and New York section. I'm always looking at late London section and late New York section. And sometimes it can happen at any time. There's no specific time. All I need you to pay attention to the timing when the market always reverse. It happens the same everywhere in the chart. So really pay attention to that. You really understand what I'm actually saying in timing. But when we get to the video of timing, you understand it better. Now, this is just about market structure. Very simple. Very simple. Whereby that if the market is trending up, once it put up a high, now the low should not break this one. This is just a higher low, then a higher high, a higher low, a higher high, a higher low. Now it doesn't just work this way 100%, whereby that it will just go and drop. Let me show you where it did not work 100%. For example, in this area where we see price push up here. Now, when it stopped here, it makes sense for some people to be waiting for a higher low. You understand? This thing makes sense for you to be waiting for a higher low. But look at what price did. Price just retraced a little bit and continue going up. And just retrace a little bit and continue going up. It is not like textbook example. Like I said, I don't want you to be looking at it the way someone draws it on the diagram, because if you look at diagram explain it clearly. But if you go to the chart, you'll be seeing a total different thing which you need to be careful about. Very, very careful on, so that you will not, hurt yourself or find yourself in a very dangerous situation in the market. Okay, you can see also another example when the market created a higher high. You might be expecting a higher low and a higher high the way people taught you. But look at what happened. Look at what happened. The way the market just pushed up, sorry, the way the market just pushed up like this and drop a bit and continue going up. So this is just how the market moves. Now, another thing again I want to also share is when the market, let's say, when the market breaks a structure the first time, the retracement is usually bigger. Let me show you. I want you to go to the chart and look at this. Now, this was the first time we broke this structure. This was the first time we turned bullish. Yeah, this was the first time we turned bullish, though in as much as the bullish momentum started building up here, but this was the first time we clearly turned bullish. But look at the retracement level. The retracement was very deep. You can see the retracement, it was very deep. Then we created another uptrend, but look at the retracement level. The retracement was so small. Now, you can see there, the retracement was so small. And look at what happened next. We created another uptrend, and we had a small retracement again. We created another. Oh, you see the idea of what I'm actually explaining to you. So don't take it like the way someone is drawing it like this, high, 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 low, high, high, higher, low. Now, if you go to the market and be looking for this, you're going to get yourself short, whereby that you'll be thinking that at every higher high you are meant to sell. It could just be a minor pullback for the market to continue going up. Let's say, for example, market puts up this high, you could just wait for retracement with other confluences, like RSI timing. You might know when to get in. Even situations like this, when it's not every pullback you are going to trade. If you do trade every pullback, you need to know what you're doing as a trader. That's why I strongly believe that trading is all about discretion. As you trade, learn, gain experience, make mistakes, don't feel bad. All of those things will definitely add up. Just don't give up. That's the only thing. So you know when to put your risk and when not to put your risk. All of these things, you'll be seeing it in the chart. You understand? So this is just about uptrend and downtrend. If you have any question, you can choose to, let me know. Let me look at it. So this is also a ranging market. You can see this is what we'll talk about in ranging, where the market is moving in a triangular format. Though this one is not a good clear example. You can see price, pushing up, coming down, pushing up again, coming down, pushing up. You can see, but it broke it. This was when we broke out of that range. We broke out of the range, retrace, coming back to the range, and we just continue going up. So this is example of a ranging market or a consolidation market. You can either call it ranging or consolidation, where price move in opposite direction. You can see it goes up, come down, goes up, come down, goes up. So this means that market does not have direction, and that was what happened here. Market was just going up and down before we break out to the upside. Immediately we broke out to the upside, we did a retracement, and guess what? Price continued to go up. So this is just the way price works. Let me look for another example. I'm also going to show you support and resistance. It's just the same thing. For me, support and resistance doesn't work all the time. For example, for people who focus on support and resistance, imagine you want to take buy at this resistance, at this support. You can see, imagine if you want to take buy here, you just end up in loss. You can imagine. So you need to know the situation of the market before you know what to do. You need to know the flow of the market. Not every support and resistance will be taken. Not every higher low, not everything should be taken. You need to know the flow of the market before you know the one for you to take. Let me also look at another example. Let's look at this. Okay, imagine, let's say for example, the way this market pushed up like this, then did a retracement like this, then push up again. Now, in your mind, you only see that, oh, this is bearish. You might be, this is bullish. You might be putting a buy order right here. You might try to say, okay, let me buy Euro USD once price gets here. But guess what happened, guys? See the way price heavily broke to the downside. Now, why did this thing happen? You need to know the overall direction of the market. And if you look at overall direction of the market is flowing south. So the market is actually dropping, and that is why this support did not work. Now, but what happened? The resistance worked. You can see this resistance worked. It sold off, it returned back, touch it again, and it still sell off. You can see you need to know what to use at every given time based on when you meet price. You can see this support and resistance, this particular one worked well, very well. Each of them are very subjective. You need to know when to use it. You can see this resistance here might look like something that did not work, but it worked. But what the market did was to push up a little bit and still go back down. I'm still going to talk about this, when we start looking at the things I learned. This is just for you to understand market structure. Some of you guys already understand market structure. There are thousands of videos about market structure. So I didn't even want to make this video so long because so many people have done videos about market structure, even try to explain it on lower time frame. But what I'm telling you is that what you are doing in 15 minutes time frame is so risky. The best time frame for you to look at in your market structure is your 4 hours. 4 hours is amazing. 1 hour is also cool. But for me, I need to know 4 hours levels. I can also be looking at it on the 1 hour as well. So it is important for you to be mindful of it. And everything I'm going to be saying here will be connecting as I'm talking about what I learned about RSI, of which that video will be coming next. How to use RSI, and again what I learned, because I want to teach you how to incorporate RSI with market structure. I'm going to be doing video on that, and that will be the next video, and you can't afford to miss it. If you enjoy this video, share it with people, and this is free. I'm teaching you guys how I do my thing. You can subscribe to this YouTube channel, turn on the bell notification, and guess what, get ready for the next video. Thank you for watching. See you in another video.